Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde back. Taylor Riggs still here, counting you down to the closing bell. And we're here to help take us beyond the bell. It's our global simulcast. We're joined right now by Massar and Tim Stenovec. We welcome our audiences across Bloomberg Television, radio, as well as on YouTube here. Taking a look at a market, Carol, that is off the lows of the day, but the damage is done here. We're lower on the day and on the week.
Yeah, absolutely, but only a hair lower, considering all the volatility and the big moves that we saw in individual names and also the overall equity changes. It's amazing that we're not down a lot more, although the NASDAQ, you're still seeing more than a 1% drop for the week overall, Tim.
Yeah, that's really what I got my eye on too, Carol. We're down for the last 5 days on the S&P 500, only 0.1% in the Dow, just shy of 0.2%,
Yeah.
given all the selling.
You know what I have my eye on? I'm looking at a Twitter post by Caroline Massar.
Yes.
I knew this was
sparkling
I wish
wine.
we could.
Have you guys drank all of that yet?
No,
you
we
know
haven't. But I got to tell you, people. She tweeted out this photo, and too bad we don't have a picture of it right now. She's holding a lot of wine, and
there's a business story.
People have already gotten in touch with me. People have already gotten in touch with me saying, "What's going on
had
here?"
a glass or something.
I thought you were just celebrating your shorts on the market because that's the only place you've been winning if you've been this week in the longer term. But you're right. Overall, this has been a pain trade. Whether you've been long bonds or whether you've been long stocks, maybe not long wine though.
1, 2, 3, 4. So I at least see 4 boxes. There's 5 of us. So
there's more.
I'm going to save us and bring us back to these markets.
Are we talking markets?
Still off 1.4% here on tech remain. And as we've been mentioning, though, big swing up on Wednesday to the big decline down Thursday. Some of the biggest volatile moments that we've had in this market going back since the 70s.
Remember yesterday we were quoting Dow points?
I know.
I don't think we need to do that today. We're down 86 points if you care about that on the Dow Jones Industrial Average. It's going to finish the day down roughly about 0.3% as we wait for these numbers to settle. On a weekly basis, though, that's only down by about 0.2% here. So when you talk about the idea that maybe this wasn't sort of the panic selling that we saw all week and that people are willing to buy this dip, maybe that's representative of that. The S&P lower by 23 points or about 0.6% on the day, only down about 0.2% on a weekly basis. The NASDAQ not faring as well. It's down about 1.4% on the day and about 1.5% on the week. And the Russell 2000, you really have to keep an eye on some of these small cap names because we saw some pretty persistent selling here all day long. In fact, all week long, the Russell 2000 lower by 1.7%, Carol.
Yeah, I'm just going to draw your attention to the best and worst performing name in the S&P 500 for the week overall. Best performing, EPAM Systems, up more than 30%. And the worst performer, Romaine, you talked about it earlier. Care to guess?
Oh.
Etsy?
Under Armour, down more than 30%. It's also one of the worst performers this year.
You know, Carol, when we think about some of the individual performers, I also want to look at some of the sector movers. Dare I say it, a little bit better breath than we had yesterday. There actually are a few sectors, sort of 2 levels down for the S&P 500 that are in the green for the day. Let me walk you through them. It is a little bit defensive. Energy will take that out. We know that that's up 3%. Household products, utilities, food and beverage, communication services. That really highlights, Carol, the big defensiveness of the nature. You're up anywhere from 0.5 to about 0.9%. Down at the bottom, though, things do really start to look bad in terms of the worst performers here. It's all technology. It is all revaluing some of these long duration assets, software, media, and then, of course, some of these food and staples as well, which is interesting when we think about some of this food inflation underway.
Yeah, a lot of selling. So it was a little tough to find some gainers, but I found the Monster Beverage among them, up about 4.4% in today's session. Top of the NASDAQ 100. Mixed earnings report, which is interesting. Better than expected sales. They did fall short on EPS and margins, but analysts seeing those margins improving. They said there's going to be U.S. price increases and an expected easing of some temporary headwinds. So some upbeat thoughts there when it comes to Monster. Also want to mention Chemocentrics Incorporated. This is a biotech company leaping about as much as almost 25% in today's trade, settling still with about 11% gain. This is after it reported first quarter results. It included a ramp up in sales for a new drug to treat a specific particular disorder. Oh, what's the sorry?
Oh, we're listening. Go ahead. Sorry, Carol. Go ahead.
Okay. Yeah. I'm hearing voices in my head, but that's pretty common.
Yeah, well, after 3 glasses of wine.
I haven't had any wine. You can't have wine until after the closing bell. McKesson, also an outperformer, up almost 6%. Evercore ISI and Barclays also coming out, raising their share price targets after the company forecast adjusted earnings per share for 2023 that topped analyst projections. I'm done.
All right, well, my turn now. I'm going to talk about Under Armour. Romaine, you hit this earlier, but it was such a big move. I wanted to hit it again. Shares of Under Armour taking a real beating today, down close to 24%. Struggling with supply chain issues, pandemic-related shutdowns in China. We saw companies such as Nike and Lululemon also take a hit as a result. News Corp.
The thing I thought about the Under Armour, though, I mean, they are actually talking about like actual canceling orders and things like that too. So this seems like a step beyond, I think, what we've heard from other companies and their supply chain issues.
It does, and the question is, though, I mean, we talked about this with Mattel's COO and CEO in the last few months. I mean, these are companies that have changed their supply chains as a result of what's been happening over the last couple of years.
Yeah.
When do we start to see companies actually make, permanent changes? Brooks CEO, we spoke to him last week. Well, it's a Berkshire Hathaway company.
Yeah.
They got lucky back in 2019 moving their production from China to Vietnam.
And I can tell you, this was a real issue. We were trying to buy tennis shoes for our son, and I mean, the model that he wanted.
There's
I mean,
a little
just couldn't
Romaine.
find them. They couldn't find them. Yeah, and he's even more handsomer than me.
Hard to imagine.
But no, in all seriousness, I mean, you know, it's just like you just couldn't find it. I mean, they just don't exist anymore because of these supply chain issues. And then you just buy a different brand, right? You just move on.
I mean, I heard soccer cleats, just impossible to get right now. Shares of News Corp, the parent company of the New York Post, the Wall Street Journal, taking a hit today. The company shares falling more than 13%. And Peloton actually hitting an all-time low today, down 7.7%. This comes after news that the company is said to be exploring a sale of 20% of the company, looking for a major corporate partner or perhaps a private equity company to come in and supposedly validate the business.
Supposedly.
Yeah.
Here's hoping I still validate that business from a personal perspective. Let's have a little look at what's happening in terms of commodities and across asset, really, because we're seeing once again actually oil managing to hold up relatively strongly. This, of course, is, as we see energy, the only outperforming industry group in terms of stocks. We're seeing oil posting a second weekly gain. This is all on the back of, once again, Ukraine, Russia, and Europe potentially getting that little bit closer to a ban on Russian oil, tightening up that market. We're seeing oil having its first, I think, back-to-back gains in about several weeks now in terms of and hitting actually a 6-week high. That actually, interestingly, as we see the dollar continue to push higher. So overall, we're seeing a mixed market in commodities. So oil on the upside, but look at what's happening in terms of King Dollar, really your only haven of choice. The Norwegian krone has been somewhat supported by the likes of the commodity prices going higher. The Canadian dollar not finding support from commodities because its story is one of actually deteriorating labour market, a labour market that is so tight that we saw numbers really sort of shock people today overall. And still we got a story really of the US being the only main hawkish game in town, and that's why the dollar continues to outperform. Taylor.
What about Andrew Bailey? He's pretty hawkish.
Yeah,
he's hawkish, but doesn't help the
incredible.
pound when energy prices is going up and they're talking about recession.
Yeah, a good point there when you think about maybe one of the few central bankers remain maybe with gumption to talk about stagflation. That is a whole different story. But let's get back to full faith and credit here. I think really interesting. Intraday basis, you're getting up another 2 to 10 basis points or so across the curve. For a weekly basis, Carol, you have a 10-year yield that's rising for 10 straight weeks.
Wow.
You're up 19 basis points on the week. So again, putting this week in perspective on a huge week where we saw 50 basis point move from the Federal Reserve, the first time since 2000, and another decent jobs day today.
All right, so in terms of putting into perspective, next week we're going to hear from a lot of Fed speakers, right? We've got Mester, Bostick, Williams, Kashkari, Barkin, Waller. I mean, all of them will be coming out. So I'm curious like how they shape the narrative, or how much is in kind of a debate, if you will, among those Fed members about what we got in terms of the Fed decision this week. So I wonder how that will help or hurt the market trade next week.
Yeah, I'm interested in that too, because you remember just how much chatter there was after the last meeting, how
Tons.
I guess forthcoming some of them were willing to be about their thoughts on whether the Fed was being aggressive enough. I think when you sort of overlay that with some of the economic data that we're getting next week, including a key CPI report as well as PPI as well, that's expected to be persistently elevated, what that commentary is going to look like.
I've been reading some analysis for CPI and Romaine, even on a core basis, you're looking at a minor deceleration, maybe from 6.5%, but core is still going to be above 6. Don't even get me started on headline inflation, and know that the central bankers ignore it, but the real people on the ground still have to pay on that headline inflation.
And the prices are too. I mean, I was joking earlier about the bagel that I paid for this morning, but when you go into stores now, the price increases, I think, are noticeable. I mean, I know they've been going up before, but if they just went up a smidge, you kind of didn't notice it. But now there's just huge jumps, and I think that you notice.
And it's sticker shock, and it's also at a time where you're not getting sticker shock in your paycheck. What is it, about 5%, 5.5% that we saw year-on-year growth in your wages that came out in the labor data today? That is slower than overall CPI. And of course, notably, it's slower than the market expected. But is that the potential silver lining here, that we aren't getting this sort of wage price spiral that the Fed is worried about, and therefore we'll start to see inflation dialed back a little bit?
Yeah, the big question, though, is balance. I mean, that's obviously what the Fed is trying to achieve with the quote unquote softish landing. But how we get to that balance and when, I think, is a big question.
Well, I'll tell you, this is how we get to the balance.
All right.
Sparkling wine.
Our TV guy,
yeah. Can I come over there? I think
Jay,
Caroline's sitting closer to you.
can I?
Maybe Caroline. You should get Caroline's.
All right, they're not going to see.
There you go.
I haven't drunk in a while. I need some.
You are all welcome.
There's plenty for everyone.
The team
trust
is
me.
back. It's so great. All right, we got to run. That's going to do it for our cross-platform coverage on radio, TV, and YouTube. Have a good weekend, everyone. We'll see you, our team, same time, same place on Monday.